last time I did a very quick video on a swing trading strategy which was called IPO basis. Now, obviously, a lot of you guys loved that video and the comments were very positive. So what I realized is, okay, there is another very simple strategy that I can actually teach you guys. And this actually works both from a fundamental standpoint and from a technical standpoint. Now, what is this theory? This is known as ATH, or also known as all-time high breakout strategy, right? Now, what is all-time high breakout? All-time high breakout basically means that a stock is currently sitting at either its 52-week high, means it's the highest point in the last 52 weeks, or it is sitting at an all-time high breakout. Now, what is the significance of this? Whenever a stock is either at all-time high or at 52-week high, that means it has removed all the sellers and it has come into a positive momentum and it is currently sitting at the top position. Now, just imagine if it breaks that top position, usually there will be no other resistance on top. That means nobody else would have bought the stock at a higher price which they would want to sell in the past. So that is why the stock usually starts making new highs and it starts going and giving great return on this perspective, right? But obviously it is not as simple as it sounds. So let me today show you how do you first scan these stocks, how do these stocks even come in your radar in a shortcut method. Then we will look at some examples, and then we will look at what the stop loss is, what is considered a good breakout, what is considered a fake breakout, what is actually a strong momentum company. So I will teach you all of this in today's video. So it's going to be awesome. I hope you guys are ready. So let's begin. First, let's look at how do we find these stocks. So if you just go to Google and type 52-week high stocks, you will get this charting image, right? Like this link you will get, where here it is very simple. It's a 52-week scanner. And if I show you some examples over here, right here, you will see, for example, Lumax Industries, one of the company. You see how it is in a beautiful positive momentum and it is currently at all-time high. Let's say Ask Automotive, beautiful momentum, all-time high. MCX, beautiful momentum, all-time high. Now, there is one thing I want to tell you guys here, which is a big misconception a lot of people have. A lot of people say that, Shashank, this stock is currently at an all-time high, so it is too risky, we have to sell. The answer is absolutely the reverse. When you have a stock and it is at an all-time high, please understand it has finished all the sellers and it has reached this point. That means right now in this stock, there are no sellers over here. It has broken all the sellers. The green candle means the buyers are active and there is nobody selling here. The buyers are more strong. So when the buyers are strong and new people have bought at this price, it cannot be a bad time to invest. So that is why a lot of people have this misconception. Shashank, right now X stock is sitting at all-time high. Should we exit? I'm like, no, because if it actually breaks out, it is going to start its new journey where there are nobody above it who have actually bought it in the past. So it is completely new buying, fresh buying. So if you see Lumax here, it has been hitting all-time high at least 5 times. Like it is all-time high here, it was all-time high here, it was all-time high here, it broke that all-time high here, all-time high here, all-time high here. So technically, an all-time high is made when it breaks the previous all-time high, and that is how the stock goes up, right? So a lot of people get scared that, okay, Shashank, it is broken all-time high, it is scary. It is not, because it will continue to go up. And please understand, the stock is in good momentum. But obviously there are ways to find out good and bad. So I will teach you both examples. But this is a very nice screener. I will send the screener to you in the comment section below. I'll put it. So a lot of companies, Interglobe Aviation, Abbott India, let's say Nuama, right? Sundaram Finance. Look at this. But it is very easy to understand how to play this also. Now, let me come to the second part, which is, let me go into example mode, into chart patterns, right? Now, look at this. This is Nuama Wealth, okay? And this has recently given an all-time high breakout over here at 7,800. Now, if I go into the past, you will see there is nobody else who has bought anywhere at this point. This is an all-time high breakout, no resistance on top. That means these buyers, the buyers who have come here, have nobody else to sell on top. Usually there are some resistance. Like for example, here somebody who has bought will want to sell it back here. But the buyers have become so strong and it has broken out over here that it has created an all-time high breakout. Now the question is, Shashank, if this has created all-time high breakout, then this is not a good company. This is a bad company. It is too overvalued. Answer is all wrong. Why? Because just now it has given an all-time high. Usually when a stock has to go up, right? Here, this was also an all-time high that it broke at that point. Obviously, if you couldn't see the history, this was an all-time high that it broke. After that, it obviously went up till here and then made a resistance over here and fell down. Now, if it has taken an all-time high, if it has taken an all-time high over here, right? The ideal progression of this is usually to come back here, and then start making new highs. Obviously it'll go up, down, up, down, up, down. It won't go in a single obviously line. It is not possible, but at least now you have a good zone until it consolidates and doesn't move, and then maybe it'll go down. But this leg of all-time high breakout is where you captured a very good return potential, right? So this is a good company. Now, how do I know whether this is a good bet or not? For that, what we do is very simple. We also look at whether the stock is in a good sector or in a trending sector. Now think about it. If the company has reached all-time high, that means the stock is fundamentally strong, or else it won't reach all-time high. Also, sometimes it might be news based also. So news based is scary because it is news. If the news dies out, it will fall down. Like most defense company was news based. Now if you look at Novama, it is fundamentally strong, so that means it is fine, number one. Number two, it is in a good sector, which is wealth management, which is currently playing a decadal theme, not 1 or 2 days theme, decadal theme. So this is good, and it has broken all-time high, means now it has fresh wings to fly as much as it wants on top. Now, if I give you a similar example in another stock, let's say 361, this is also in the same business, same industry, but you see here it is not reached its all-time high. So there is a resistance over here. A lot of people who have bought here will sell. So this stock will wait a little bit, consolidate here, and then it'll go up again here. Again, it has resistance. It'll wait here. It'll take some time. And then once it breaks here, the move is usually faster on the upper side because there is no resistance on top. Got it? Now, let me give you another sector. Look at this company called Fortis Healthcare. Now see Fortis Healthcare. Again, if I zoom out, you will see that this was the all-time high breakout over here, right? This was the all-time high breakout over here in Fortis. Now it broke out here, went up, came back to relax again, because all the people who bought here will usually start selling because they are booking their profits, okay? And then it comes back down, but just look at this profit after the all-time high breakout, right? In the last whatever, it's almost from when did the all-time high breakout happen? 5th June. In the last 25 days, the return is around 7.6%. 25 days, 7.6%. Now, how would I trade this, right? On the day of the breakout or the next day of the breakout, either on the day or the next day, when you see this, you have to keep a stop loss because not all trades are open trades and easy trades. So where do I keep the stop loss? Very simple. The stop loss will be the breakout zone, because if it goes below the breakout zone, that means your whole thesis of breakout, strong company, fundamentally strong is failed. So as soon as if the stock comes down here, let's say at 737, I'm saying, okay, I lose only 1% of my trade. If I lose 1%, but if I win, I can win more. And now, as soon as it goes up here, right? As soon as it goes up, you can just move your stop loss to cost, which is at the breakout zone, and then let this ride in profit. That's it. Now you're riding in profit. Let me give you another example in the same space. Now look at this. For example, Fortis Healthcare, hospital space, which is currently going strong. The whole sector is going strong. So you will see a lot of very strong all-time high breakouts, which will not come back in the very easily. Now look at another company that did a breakout a few weeks ago. See Narayana Rudalaya, okay? Beautiful breakout, strong volume. Look at this, zoop, volume happened, breakout happened over here, right? Good all-time high breakout. As you can see, nothing in the past over here. And then from here, it went up, came back down. It usually 90% of the time, the stocks do a retest. Retest means it'll go up, come back to that same zone, and then fly back up from there. So ideally, the best entry is as close to the retest as possible. Retest means coming back to the same zone. And if you had to put a risk reward on this, because this did a very strong breakout at an instant position, your stop loss will be slightly bigger, which is maybe here, right? 1.79 or 2% stop loss you can take, and then let this position ride. So again, this company in the last, maybe let's go down here, somewhere around here. So it broke out on 13th June, which is just 14 days ago. In 2 weeks, it has given 11%. So it is not a very difficult strategy. You have to wait. You have to have patience. It took 2 weeks, 14 days you have to hold. But again, why am I okay? Strong company, not a problem, right? Strong sector, not a problem. Fundamentally strong, not a problem. What can go wrong, right? If 2, 3 things are good, what can go wrong? Now, let me show you some recent all-time high breakouts. If you look at large cap, one more company that just broke out is Bharti Airtel. Now look at this. Bharti Airtel just broke out from here. Again, nobody in the past. So this is beautiful. Ideally, it should have retested. Look at this. I said 90% of the time they retest. This company did not retest. It has just gone up. Yes, there will be some consolidation. It has to come down. As you know, every chart goes up, down, up, down. So what happens is when it comes down a little bit, you can start accumulating positions. But if you had bought it on this day or even the next day, your risk reward ratio becomes perfect. A lot of people get anxiety saying, Shashank, I couldn't buy it on the day of breakout. I say absolutely no problem, buy it on the next day, but keep the same stop loss which is below the swing, which is again 1.5-2%. So you're okay to lose 2% in every trade, but if it does well, for example, this is a very recent trade, right? When did it break out? It broke out on 20th June, literally 5 trading days ago, and it has given a profit of 5%. And here you can just put your stop loss back to cost and just let this ride, right? And here it didn't even come back to your retest zone, so even if you had bought the next day, it was absolutely fine, right? Let me give you one more example. Okay, one more I have in my watch list. Okay, finance companies, right? Your NBFCs are doing well because of rate cuts. Now both private and public, look at HDFC Bank, beautiful. Now just look at this breakout done. Okay, all time high breakout done with good volume, nobody in the past. Currently today it is retesting, right? Now if I initiate a position even today, let's say, by the way, I don't have any positions active right now because when I make the video, I don't have positions in any of these companies, so that I'm fair on this. So if I had to take a position today, I would take this position like this with a swing low. So basically 1% stop loss, literally here 1%, which is quite a bit actually. And now I will wait for 1 or 2 weeks to let this ride. Why? HDFC Bank, strong volume, all sellers have been taken out, fundamentally strong, undervalued also. So I have very good opportunity. Worst case, some bad news happens, market falls, no problem. 1% stop loss. I lose 1%, right? So obviously, if you have 10 lakhs in your account, don't go put 10 lakhs into one company. How we usually play, or how I usually play it, is if I have 10 lakhs in the account that I'm trading or even investing, this works in investing and trading, right? If I'm investing 10 lakhs into a company, if I have 10 lakhs to invest, I will invest 10% into one trade. That's it, just 10%. And then as soon as it goes up, I make that trade free, right? That's it. Then my stop loss, I'll never take a loss on this. And sometimes I even push the stop loss to slightly higher, so that I always take a 1-2% profit and I start trailing it as long as it goes until the game gets saturated and it consolidates, right? Now another example is Larsen and Toubro finance. Okay, so L&T, look at this. I hope this is helping you guys. I mean, I'm trying to give you as much knowledge as possible. Now see this similar pattern. Okay, here was the breakout day. It did not retest. Next day, if you had bought also, you keep a swing low of, if you had bought here, let's say, and this is the swing stop loss. So here you see the stop loss is 2.96%, slightly higher. And again, this is just broken out 2-3 days ago. Just broken out 2-3 days ago. But very rare that the stock will come back down below this point if it is a fundamentally strong stock, because the buyers who have bought here now have to sell in loss, and buyers don't like to sell in loss. So this becomes an automatic advantage. And as I said, this sheet 52-week high stocks are very good. Now obviously you see here, you will be like, Shashank, there are 31 stocks over here, right? Like see, Fortis is here, right? Bharti Airtel, what I showed you, is here. IGL, India Glycols, just gave a breakout, wonderful. But the question is, Shashank, do we take all of this? Answer is no. Ideally, whatever is in a good sector, right, strong sector, currently auto ancillary is strong, renewable energy is strong, NBFCs are strong because of rate cuts. So these are all fundamentally strong stocks, and they've just broken out all-time high. That means now they will make new highs, go up, and create new highs, and you should not be greedy in this. Okay, now coming to the next, what should be my take? Take means how much should I book profit? See, I'm trying to give you all angles so that you are not confused. So that is why, again, if you are confused, put in the comment section below. What is my take, or how much should I keep as my risk reward? Right? Immediately try to make your risk zero. Right? You have 2%. You have to wait for 3-4 days only. In 3-4 days, either it will go up or it will come back down. So you'll understand within 1 week whether this stock is going to go up or it is going to come down and hit your stop loss. 1 week only your position is there at risk. Now, if the stock goes up, your position is free. You start trailing your stop loss. So, for example, if I have got 5% profit right now, currently it is going at 5%, my stop loss will be at 1% profit or 1.5% profit or even 2% profit depending on you. And then when it goes to 7%, you will push it again to around 3%. And then one day when you feel that, Shashank, it is overextended, right now I think it is completely done, now it will reverse back, you can exit the whole position of 5, 6, 7%. So you do this at least 5 times regularly or 7 times regularly, and always keep stop loss at not more than 1.5%. After the breakout happens, you are going to have a very good risk reward ratio. As I said, this is also subject to risk. What is the risk? Some macroeconomic news comes, some war happened, another new war started, then all of this will come down below the breakout zone. But if nothing happens and we are just letting the market go the way it is, fundamentally strong companies will always go up, right? So lot of people who exit at all-time highs never do that. All-time highs where you actually accumulate more, and that is what you understand, right? So again, by the way, we are also powered by Grow. As you know, we are a part of the Grow network, and if you want to invest in stocks and understand a little bit more about the market, you can definitely download the Grow app. The link is also in the description below, right? So again, guys, I hope this video actually helped you guys a lot. Now, last time I did a IPO based video. This time is an all-time high, and I showed you 5 examples. Also, 2 examples were recent all-time highs. Now, if you like this format where I'm teaching you a little bit of technicals also, swing trading and fundamentals, because see, this strategy works on both sides. If I want to take an entry into a new stock today, if it's a large cap, I would rather do it at this point. So if you like something like this, let me know. I can make more such videos. But for this to become a success, you have to watch it, subscribe, and also share it with your friends, because if the views are less, then there is no point. A simple hack to get more views also is if you just like the video. Even if you are not subscribed to it, just like the video. If you like it, the YouTube algorithm will show it to more people, and then it would become better. Okay, awesome. This is me, as always, giving you good content. So I'm going to see you guys soon again. This is me, Shashank, signing off. Take care. See you guys. Bye bye.